China owns hundreds of billions worth of U.S. debt, yet the amount of those holdings has been steadily decreasing over the years. Our head of global research, Murray Gunn, has been keeping a close eye on this, stating in his March 2025 issue of our Global Rates and Money Flow publication, the swagger with which the U.S. government is conducting itself on an international stage is a symptom of a country which has enjoyed the privilege of having the world's most popular reserve currency for the past 80 years. This, adding to the reckless borrowing, has made the U.S. Treasury market the biggest and most liquid sovereign bond market on the planet. Central banks and funds around the world have been virtually compelled to park money in U.S. Treasuries and lend to the U.S. government. Could this be changing? The latest data shows the official Chinese holdings of the U.S. Treasury bonds are at their lowest level since 2009. Back then, China was increasingly lending to the U.S. government, recycling its ballooning trade surplus. The China-America marriage seemed to work well. Americans bought cheap Chinese goods, and China invested in some of that surplus in U.S. Treasury bonds. The Great Financial Crisis and subsequent quantitative easing put a wrench in the works, slowing down the Chinese lending to the U.S. And then the prospect and manifestation of trade tariffs from 2016 put things into reverse. The last decade has seen official Chinese holdings of U.S. Treasuries decline markedly as the once happily married couple realize they can't reconcile their differences. With the current U.S. administration upending international relationships, foreign investments into U.S. Treasury bonds may well decrease further. This increases the probability that at some point an accident in the Treasury bond market may occur. We're keeping a close eye on those frequent and large bond auctions for any sign of decreasing demand. If you want to stay on top of these developments and more, check out the links in this video's description. And if you want to see more videos like this, be sure to like, comment, and subscribe.